Here we go. Hey, I think I'm live here, so we better get our act together. Hello, everyone. Welcome back to the Rational Investors. What the heck is this? This is a Broiler Chicken Show. I don't know whether it's actually working or not. It's always a challenge to see. Whoop, sounds like it is. What the heck is this? Yay, here we are. We made it. Episode 437. Always a challenge. I don't know what it is. I was thinking about maybe putting on an episode number or something like that, reference in the title. But anyway, welcome back to the Frivolity. Who knows who's going to turn up here today. These are, of course, our free videos that we do for the viewing public. Edutainment. I don't know, infomercial? No, it's not an infomercial. That's trying to shill you something. What's actually really cool about what we do now, if you actually look at the description of the video, I'm trying to shill you to come and take our free 30-day trial. That's the shill right now. Come and take advantage of us! Party! So really, I mean, technically, if you're watching these weekend shows, you could just come and hang around, watch the daily briefs and Brian's antics Monday to Friday if you like. I guess I'm like one of these karma kind of guys. I honestly believe that if I actually don't even think about money, don't even think about being motivated by monetary gain, and just try to be a good person, wow, the universe really takes care of me. So. It's great having business partners, especially young guys who are all like, profit, money. I started this adventure off back in 2014, doing all of this stuff for free. Actually, 2013, really. And ironically enough, actually, I learned a very hard lesson. My old man, he used to always say this. He used to always say, people only value the information that they get from you based on how much they have to pay for it. So when I used to do these free videos and stuff, we had some kids who actually misused the tools. They didn't pay attention. They decided that they knew how to use tools that I had built specifically for specific jobs and their own unique ways, and ended up blowing themselves up because they just wouldn't listen to me. Why? Because they didn't have to pay any money for the information. So in a weird sort of way, it's actually in your best interest that there actually is a fee for things like the school program. If you really want to learn this, you got to have some skin in the game. So ironically enough, that's actually the primary purpose for charging money for the course program. And, our students consistently say, the price is ridiculously cheap. If you spread it out on a weekly basis, it's like less than... it's like $100 a week or something. It's just ridiculous. I think actually it's even less than that. So anyway, that's not the point of this. The point is, it's Sunday. It's broiler chickens time. I'm not quite sure what kind of I can do to help the public through this kind of environment, other than maybe to just sort of say, it's not really. We are in an absolutely extraordinarily unique window here. So ironically enough, this is probably the one time in my entire career where we could probably go, well, maybe this time it is slightly different. If you haven't heard this on the public broadcast before, I'm sure sight people hear it from me out the yin yang. But if I understand correctly, there's like 6 different celestial cycles that are all coming to an apex in this year. And that, you ask astrologers when was the last time this kind of event happened, they said, well, it's probably about 1 million years ago. So make no mistake about it, 2020 is going to go down in the record books. Jeez. Sure hope we live all through this. We all live through this. Interestingly enough, today, actually yesterday, but for the purposes of letting you guys know, is my son's birthday. So I've actually been spending a lot of time thinking about him, and as soon as I'm done this, I'm going to head off and spend the afternoon with him. So it's interesting, especially for the new level oneers. And, of course, general site members and stuff. I don't know how many people who watch this in these public videos actually know my story, but my son is low-functioning ASD, autistic spectrum disorder. So in a weird sort of way, it's actually very refreshing being able to sort of unplug from the world. And yet, I mean, it's fascinating, internet and all that kind of stuff. But to someone like Liam, none of that stuff means anything. And it's kind of refreshing to just unplug and check in with him, and just sort of escape the world on a regular basis, because like I said, something like a Bitcoin, I still, I've tried to explain to him several times, but I don't think number one, I don't think he understands, and number two, I don't even think he even gives a shit. I will say though, and I was eternally touched that I did put up a donation page that specifically is for Liam. It's a wallet for him. I won't specifically tell you where it is. My business partners were kind of like, that's undermining our business, Brian, stuff like that. But the people who have asked, how can I help Liam out directly, they have. And actually, he is, ironically enough, Liam is very well crypto insulated. And the sole purpose of that fund, in my eyes, is if the system blows up and all hell breaks loose and it takes like $500 to buy a loaf of bread and the financial system is collapsed, that will be his safety net. So thank you, those people out there in the world, you know who you are, who have asked if you could help him directly. The great part about that is it just sits in his little cold storage wallet and it does nothing. So anyway, I've got Liam a lot on my brain today. As I said, actually I went and just got him a hockey jersey for the local team here in Vancouver. Can you believe how much they charge for these silly hockey jerseys? I mean, it's almost laughable. But anyway, what a marketing machine these professional sports organizations are these days. But anyway, every Vancouver Canucks fan's got to have an authentic jersey, so that's what I got him. And of course, I got to go load up on. That was funny. His birthday technically was yesterday, so I called him up to wish him a happy birthday at about like 9:30, 10 o'clock, and I'm like, so how's he doing? He's like, he's eating breakfast. I'm like, okay, that's cool. And then, okay, what's he eating? Oh, he's having his birthday cake. It's like, what? So I get the impression Liam's had a bit of birthday cake over the past couple of days. Anyway, that's a nice little sneak peek. And I don't really talk too much about my own personal life too much with you guys. But if anything, that's it's a kind of a cool little sneak peek into Brian's life, like outside of trading, outside of markets, so. All right, well, anyway, gave you a nice big tout for Liam there today. Way to go, Liam! Happy birthday! 20 years old. Jeez, I'm an old man now. As I've sort of said in the past, the weekend shows really are try and dovetail and help the level oneers. It's a huge, steep learning curve that you have to go through in that level one course just to sort of get up to the point where I think you can at least stand up on your own two feet and not, set yourself up for disaster coming in and investing in the market. So I don't know whether Kevin, I think I see Joshua over there on the YouTube page. But Kevin, I think he's actually in the call here with me. Yeah, hey, there you are, bud. Do you happen to have that, the Q&A document that we've been sort of passing around there in the level one just in case they had extra questions? Um, yeah, I messaged it to you. Okay, cool. I'll look on the Rocket chat then here. Hey, there you are. Oh, you're so awesome. Thank you, sir. Appreciate it. And might as well start right off the bat. What are my three gratitudes for the day? I mean, it sounds so redundant. I keep saying it over and over and over again. But anybody who's in the level 1 class today, those guys are fucking pros. Jesus Christ, you gotta be. I have to. Sorry, Jesus, I didn't mean to take your name in vain there. I mean, God, I have to be so thankful. Like, where did these? They're all little saints. You guys are over there on YouTube hanging around with, you see him, the Joshua McGowan. I mean, that guy's like, and Kevin here. I mean, these people are like, they're like living saints. They're actually living angels. I guess, and I don't know. Everybody comes to this world from a different place. And I don't know. I mean, I don't want to sound sorry for myself, but I guess I never got to have these kind of cool people in my life when I was a little kid. And it's actually really refreshing that I got these cool people in my life at some point in my life. It's just wow. Just so what are my affirmations? I don't know whether that's the right word. Gratitudes. Sharktoshi, Kavarkinator, and the Wookiee. If any of you guys have any idea who the heck I'm talking about, they know who they're talking about. They are, I mean, just the most beautiful people possible. I mean, I could probably spend the next hour or two just going through all of the different gratitudes I have, and I have to be thankful for. I'm getting really, really spoiled here. So thank you, everybody. You guys are treating me so well. Man, thank you, universe. Oh, Brian's going to get all weepy here. Jesus Christ. When is he going to talk about Bitcoin? Fuck. Okay. Maybe, but I don't feel like honestly, I don't feel like I deserve it. So, thank you. Thank you. All right. Let's get on to some questions. I think this looks like it's from last week, though, eh? So today's the 27th, isn't it? Today is, where are we here? 27th, yeah. So this is from last week. I might have already answered these. Add questions for Brian to answer. Okay, how many broiler chickens does it take to get a Lambo or a Mustang? Josh must ask that. The interesting thing is, I think technically, now we do take a week off every now and then. But I think actually the answer to that is I'd say about 150. I think if you put the time and effort and actually counted to 150 broiler chicken episodes, I think you should be in a position where you are banging out Lambos. Yeah, I'll say that. The only problem is how many broiler chickens is it going to take you to get you to the point where you stop fucking around and get serious about this? And unfortunately, I can't really answer that question. But I believe that if you join the level 1 program, then we've got you for a minimum of 3 weeks, or 3 weeks, 12 weeks, 3 months. So for 90 days, we're just going to sit there going, stop fucking around, stop fucking around, stop fucking around, stop fucking around, stop fucking around. So Andrew, you better get that soundbite. I'm sure the censors would love that. You know what that speaks to? That's this document. And actually, the cool thing is for the level 3ers, I like this of late. I did this last term, and actually, I think the students actually really kind of respected me for it. But we start the level 3 term with just sort of a big slap in the face. You guys suck. Okay, now you may be smart. You may be, hey, you may be like, 100 huge IQ, right? Richer than stink, but when it comes to trading, you suck. So the question is, why do you suck? And the answer is, you keep making mistakes. Stop making mistakes, right? It's a little bit of a dickhead approach, but at some point, if you really do want to be a prop trader, you really want to be a professional at this, you want to open up your hedge fund, whatever, you got to stop making mistakes. So I don't think it's fair to the new people to trading level 1, right? You're just sort of learning, okay, what the hell am I doing here? So I don't want to have that kind of conversation with new level 1ers. But, this is, and I love these 2 documents. I actually wrote them years ago for sort of the crypto community when I was trying to explain to people. And I'll just share them here on the video. I don't know if maybe I can put it in a comment as well. I'm not quite sure how this works. I'm terrible at this stuff. But these 2 documents, I think they should be required reading for all sort of new aspiring traders. All our level 1ers, I basically consider you just basically, you're a newborn. You don't know what the hell you're doing. And don't fight it. Ironically enough, the people that fight this, they actually, they don't get really great value out of the program. But then, the second part of this, you got to learn what you're doing. But ironically enough, learning what you're doing actually is part of learning this thing called trading and running a business of trading. Part of it is just simply building systems that hold you to account, right? That you can actually self-monitor, and you can how do we say this? There isn't I suppose you could hire a professional trader to stand over your shoulder and be a jerk and all that kind of stuff. But frankly speaking, I don't think there's really many people who would do that. And I suppose a professional trader to do that would charge you a lot of money for that service. So what really ends up happening here is the only person who's actually going to correct us is us. And that's just the way it is. Get used to it. Isn't that interesting? I'd be curious. I wonder, this is always kind of a fun thing, but just out of curiosity, could somebody who actually was one of those 4 downvoters, could you just post in the comments here why you would downvote this? I don't even know what the heck I said to generate downvotes. I was curious. I'm just looking over here and there's 4 downvotes. That's surprising. You don't have to be here. Nobody's asking you to be here. It's baffling that. I don't know. There must be something wrong with this sort of Google Analytics. I guess so, but I like to just simply ask. Why are you like this? Nobody's asking you to be here. Nobody's forcing you to be here. There isn't any monetary gain for doing these videos. So why would you downvote? Do you have the balls to actually post why you would downvote? I'm curious. Maybe I should just end the video here. Should we just kill this YouTube video? Do you have the courage to actually engage with me? Well, the problem is that this actually is cutting into your guys' time. Lion, Garfield, Constantine, Keith, Jersey. If anything, I should, kind of like what I'm saying with the level 3ers here. This should be like let's say boot camp, right? And everybody remembers Full Metal Jacket, when the troublemaker, the guy that was holding the platoon back, when he found a jelly donut in his locker, everybody else had to do push-ups. So I'd just be curious, like, what is the benefit of downvoting this? Do you have the balls to actually engage with me here? And let's figure out why you're so angry and you're downvoting, and let's try and fix that. Good boy. Actually, I gave him props. In fact, actually, Novogratz has been pretty nice to me. I mean, I just, at some point, this has to be addressed. Why do one or two people end up just sort of ruining this because like I said, you don't have to be here. People, you don't have to be here. But at the same time, too, I hope you understand this does affect my psychology when I do these things for free and I just look over and people are like, this is bad. It's just, sorry. I hate when I go head down these tangents. It's not really fair to you, but if anything, this is me complaining a little bit. I don't like this YouTube, Google, all this. You don't have to be here. I don't get it. Oh well. Sorry, kind of a dick move of mine. But Brian's a little bit of a weirdo. And keep in mind, too, and I tried to explain this to another person on the site recently who... I was saying there about Sharktoshi and Kevin and Grim and stuff. I don't actually feel... Hey, look, there's another downvote. It doesn't make any sense. I don't actually feel as though I deserve you guys, because actually, I could be a real jerk if I want to be. I try to be a nice guy here. I do karma. Okay, enough. Sorry, guys. Brian. Okay, so I think it's important that we understand that these two resources, I think they're just absolutely incredibly important for all traders to understand that this is what you have to go through. So specifically answering your question, actually I kind of like that question. How many broiler chickens? Now you might have to fast forward through a couple of broiler chickens where Brian loses it a little bit, but on balance, I try to do pretty good here. But I would say, if you want to measure it in broiler chickens, then I think that it's about 100 to 150 broiler chickens. Which in essence, they always say that you don't really ever know a job until you've done it for a full year. So really what that's saying is you're going to be watching 50 broiler chickens here, not even really knowing what the job is, right? You're sitting here, the first, unless you, remember there was this channel is fucking invaluable. Remember we had the contest, and that gentleman who wrote out that really long note, you never did contact me, dude. I wanted to give you a free seat in the class. So if you're watching this video now, maybe you missed a couple weeks. That one person, maybe find his name, whoever it was. But this channel is gold, and it's free. This guy, he must have gone through all the broiler chickens in the past couple of years and just, left all of the exact marks. He said this here. He said this here. He said this here. And I was like, holy shit, this is crazy. So, I think you're not going to know the job for a full year. You actually have to, it's kind of like a farmer. If somebody in the middle of February said, hey, I want to be a farmer, and I'm going to go and learn how to be a farmer, and you go out into the fields from the month of February through, say, the month of March, April, May, do you really know what the business of farming is like, looking at the market, or, looking at your business from the period of February through May? Not really. Same thing with trading. So I would say, your first 52 episodes of Broiler Chickens, you are this guy. And all our level oneers, you're this guy. Do you have any business really risking any money in the market? I don't think so. I think you can go through while you're this person and all level oneers right now. Absolutely. You could go through the whole program and build your list of ideas. I really like that Vitalik guy. He does really cool music videos. He's a really snappy dresser. Oh, and he writes code like the wind. All right, so you've added Ethereum to your shopping list. There's nothing wrong with that. In fact, actually, I think that was a question in the Level 1 program today. You are building your shopping list. That doesn't mean you have to spend any money, but you can always just build your shopping list. I would say that, most new people... yeah, there you go. So Omar, I think he's done very well. Says, past my level 1, I still feel like I'm a guppy baby. And that's fine. If anything coming out of the level 1 program, this is sort of the analogy that I like to use, is that, okay, obviously this guy is way further along than this guy. And this guy now has got, okay, I kind of figured out how this body thing works. And I'm standing up on my own 2 feet. And look at me. Damn, I'm cool. That doesn't mean you go out and strap on a 10-lot ES through a New York kill zone on a poor econ and a key reversal off the 1-minute chart. That's probably more like this guy way down here. So most of our level 1ers, and really I would say going through the level 2 program, what I really watch, and now this would be like Broiler Chicken's episode, oh God, where would we be now? Probably episode 60 through episode 100. You're now this person. You're doing your little old lady, right? So you know that you're risking really small amounts of money. You've built your shopping list. I like that Mr. Vitalik, and prices come down at or below reload zones, and I'm going to start nibbling away, kind of thing. In fact, there is Colleen. Colleen, I think she could be an absolute perfect spokesperson for the TRI education program. She has basically gone through the entire process, and frankly speaking, I can feel completely confident that she was basically this when she came. She transitioned through sort of the level 1 level, and really most of level 2. I think she was still sort of here, like, I don't know what the fuck I'm doing here, Brian. And then, we went through some seasonal windows where she had done some little old lady nibbling, and all of a sudden, holy shit, this stuff's rallying. And hey, look, I'm banging out doubles. Woohoo! And I saw it happen right in front of my eyes. She literally was learning how this business was evolving, how it works. Buy when it snows, sell when it goes. I think, Colleen, does that resonate with you? I sure hope you've seen that. I watched you, and it's beautiful watching newer sort of, program graduates starting to post banging out doubles and stuff like that, those kind of tweets. Oh, it's just beautiful. How long it takes you to progress from, say, here to here is, it's murky. Obviously, there are a lot of people that sort of leave our basic education program and go, okay, well, Brian, life is busy. I got kids, I got wife, husband, whatever, career, head off on a tangent. Interesting, we see a lot of students sort of slowly percolate back going, Brian, I want to finish off the program. Actually, I had a gentleman, I think, who just joined the level 3 program who was part of our TRI meetup there back in 2017, 2018 in Europe. So it just goes to show that what usually ends up happening, it's in a weird sort of way, it's sort of like students themselves, they even get to the point where they're kind of like, well, if I leave the program mid-stride, I'm going to be stuck here. And that's fine. If you're investing for, say, your retirement 401k plan in Canada or RSPs, that kind of stuff, you maybe have a casual interest in things like cryptocurrencies or stock market or, things like that, and you just want to build some bags, that kind of talk, you might just finish at this point, and, that's it. I'm going to go off and just finish my career. I'll keep adding assets and, appropriately diversifying, blah, 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 blah. The people, of course, that do want to be traders, hedge fund managers, right? Day traders even, they do have to make this transition. And this, I'll be completely honest with you, it's a tough transition. And every single trader, it's, and I love making references to the Matrix because it's the same. There's so many things that are similar. Everybody knows the article says you either know it, that you're the one, or you don't. It's like just being in love kind of thing. You just know. Unfortunately, it's not like I can put a rubber stamp on you. Today, officially, I can't do that. Would love to be able to tell you I could. And sadly, what I think ends up happening in this world is that a lot of people that do these education programs and they trading advisory services and stuff like that, they guarantee you that you will make this transition. There's a reason when I was a retail stockbroker, there was a very real reason why I created this thing called the little old lady approach to investing, or something like the Joe Six-Pack approach to investing and risk management. Because most people lose at this game, right? 95% of people who fancy themselves traders, Mr. Barstool, they can't win at this game. That's just brutal reality, folks. You better understand that. That's the kind of thing, that's actually valuable here. That unfortunately not a lot of people in the public are going to say that to you because, hey, that doesn't sell subscriptions. Join my site. You have a 5% chance of actually doing well with this. So, as a retail stockbroker, I used to talk a lot of people out of doing a lot of trades just simply because I knew that they probably couldn't handle it. And, doing things like, okay, we're going to take your money that you got to risk and we're going to break it into 20 little parts. And we're going to say on any one single idea, you cannot risk more than one of those 1/20ths. That's Brian's second rule of investing. If you do that, then actually it's pretty difficult if you can somehow try and buy uncorrelated assets. It's pretty difficult to blow yourself up with that approach. And of course, you got your money working. And for the good majority of the world's population, that is absolutely the best thing for you. That's why index funds like John Bogle have done as well as they have. Things like dollar cost averaging plans. There's a reason why those work, because most people that try to play this game called trading cannot manage their own emotions and their own behaviors. So they are best to put themselves in a position where they don't have to, i.e. don't risk more than 5% of your stake on any one single trade. So really what this transition sort of, Graham likes to teach the level oneers what's called the Nanny Nibbles approach, which is basically a setup that implements the little old lady risk management approach to investing. And really, frankly speaking, 5% is the absolute maximum risk. You never want to break that number, ever, 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 ever. So usually what most traders do is they will take a fraction of that 5%, maybe half, like 2.5%. Then that way, if that completely destroys itself, and maybe I even get a horrible fill on the other side and lose even more money than that 2.5%, I don't break that 5%. So for those people that would like to explore this, I want to be a trader, I want to try and get a better than 30% annualized return on my capital on an annual basis. I am going to be relatively active. I may even want to get like an income out of my trading performance. Really what that actually is really all about, and actually get to this kind of activity in the market, zipping in and out, buying bottom, selling tops, owning the market. You know what that's really about? It's about this conversation. And I tell you, unfortunately this image probably looks just a little too simplistic. But really, all traders, they live on this cycle. And if you fancy yourself a trader, if you want to be a trader, even if you want to be a cowboy. Now, how does that go? I don't want to be a cowboy. Now, if you fancy yourself a trader, you then live on this cycle. What is this cycle? This cycle is all about the process. And you have to understand, this is a brutal reality of a trader's life. And I don't think most people in the public get this. A trader is nothing more than a professional statistician. That's all you are. Ideally, you want to try and hunt situations in the marketplace where it's kind of like you go, hey, I've seen this before. Hey, I know when they do this, that usually happens. That's really what a trader's life is all about. Is you're trying to identify little pockets of opportunity, pockets of anomaly. You have to understand. Oh, Jesus, how many times have I said that? I got to stop saying that. I'm just going to say it. The market, by definition, is what they call random walk. Has anybody ever heard that term before? Random walk. If you haven't, you better Google it. You better learn it. I often suggest to people it is not in your best interest to get into the business of predicting the future. I did a fun little technical study back there in March suggesting that Bitcoin would trade back to $11,000, and it was just a technical study. Just threw it out there on the net. And the reactions that I got from people were like borderline, that's irresponsible to say things like that. Well, it's just a technical study. That's what the study says. It's not like it's my opinion. It's just what the study says. So, and here we are. We went well above 11,000, didn't we? Gotta tell you, people, do not get into the business of trying to predict the future. It's just not worth it. You will be made to look like a fool. So, if we're not going to be in the business of predicting the future, what the hell are we in the business of doing? And we're in the business of trying to identify statistical anomalies. If this, and this happens, more times than not, that will happen. That's actually what a trader's life is. It's really it's that simple. It's not very sexy. Ironically enough, it actually has you standing on the sidelines just watching while other people are just going nuts around you. And ironically enough, to be a good trader or a guy who trades setups, a guy who trades statistical models, that has no emotion, you have to somehow tune out the people that are just coming into the market fresh and they know everything. And that's the hardest thing to do because every once in a while they'll throw in, but hey, this time it's different. And the worst part about it is the moment that you say that, you almost are absolutely guaranteed that no, actually, in actual fact, this is exactly the same way as every single time before, because the actual utterance of the statement, this time is different, is exactly what happens every single time. It's drives you crazy. It's this crazy vortex and it just keeps spinning around. So, like when people right now are saying that interest rates will never go up again. Oh, goodness, you got to be kidding me. That is exactly the hallmark of the end of a move. It's bizarre. It's like in 2000 when I was watching Nortel Networks and the NASDAQ. In fact, actually, we were even talking about that. If you actually look at the stock market on a on an inflation-adjusted basis, if you take in the purchasing power of the currency, did you know that the NASDAQ is actually nowhere near all-time highs? What? Wait a minute, that doesn't make any sense. You could actually make the argument that equity has done absolutely nothing for the past 20 years. That's interesting, eh? If you listen to Mr. Bezos, you wouldn't think that. So, this is a really interesting tell that, ironically enough, you people, most of you that are actually watching these videos and participating in the market, you don't even know what a growth environment looks like. Probably most of you were knee-high to a grasshopper the last time we were in a growth environment. It was kind of cute watching the way, and it's, it is adorable in the seasonal windows to watch the little stock market start to come alive in the seasonally bullish time period. And, we even had the DeFi space come alive there. I mean, that's, when we get into the rip-roaring crazy growth market, that's just going to be relentless day after day, week after week, month after month. It just doesn't stop. And it just keeps going and going and going and going and going and going. And then all of a sudden, boom, 87, and then, of course, 2000 was the end of that cycle. So, what does that mean for us now? I think the important thing for, I guess, before we get into that Pandora's box, did we answer that question about how many broiler chickens is it going to take to fry it? How many chickens does it take to get a Lambo? There you go. What I meant by 150 is 1 year of learning, and then 2 years of applying that learning seriously. Buy when it's no, sell when it goes, compounding returns, no mistakes, sell halves on doubles, sell halves on doubles of doubles, sell halves on doubles of doubles of doubles, etc. Pay yourself when the market goes, then reinvesting that capital year in, year out. Like I said, that Twitter, I didn't, and it's interesting. I don't think a lot of people really understand why I have this tweet as my what do you call this, pinned tweet or whatever. To me, there's no reason why each and every one of you can't do this. And the irony of it all is at the top of this cycle, this number was like 700,000 or some crazy ass stupid number. The point here is that I identified a market that was heading into a parabolic event, this fear asset cycle apex. And I identified, of course, a growth asset that would target that particular market. And then, of course, we had the wonderfulness of being able to participate in the speculative part of this crypto part of the market, which obviously moves much, much greater than just the basic underlying index of Bitcoin. There's no reason why each and every one of you can't do this, but you notice, look at the duration, 2.5 years. So that's very much like the The 150 broiler chickens, that's about 3 years. And the good part about it is that, generally speaking, crypto goes through these, I think they're about somewhere around 5-year cycles. So you could argue financial asset crisis 2008, Bitcoin gets going. First big blow off top was 2012-13. That's about 3 to 5 years, somewhere in that neighborhood. And of course, everybody who follows, our teachings of fundamental analysis. Every single brokerage house always stamps on every recommendation 3 to 5 year time horizon. Then, same thing. Market has to unwind 2014, 2015. Market puts in a bottom, somewhere in that area. Then, you think 2 to 3 years down the road, 2017 peak. That's another perfect window right in that. So in essence, you could make the argument 2018, 19, that same sort of 14, 15 wipeout, clean up. Here we are. 2 to 3 years down the road, I don't see any reason why we're not going to be seeing exactly the same kind of reports. And for whatever it's worth, through this cycle, I don't know whether I've picked even half decent names, but I think I've shown the public this. I'm accumulating. I am buying. And I'm just sort of buying right across the board. So here was like my shopping list over the past month or two, just buying against bottom ends of ranges. And when these things double, out goes half, get your Bitcoin back, rinse and repeat, do the whole damn thing all over again. And my hunch is, that's last cycle, as I said, I took 500 and turned it into hundreds of thousands. My hunch is, and the cool part about it is the Trek stake, even after cashing out, taking this profit out, taking a whack in gold out, paying all our taxes. Imagine that. TRI actually paid taxes. Well, that's good. At least we're good stewards. Now, whatever. Point here is, we even have 50,000 sitting in the Trex account in all the shit. Could I take that 50,000 and do exactly the same thing here through this next cycle? Yep. What kind of numbers do you think that's going to produce at the end of this cycle? It should be a lot of fun. And the weirdest part about this is, guys, is I'm not really reinventing the wheel here. I'm just showing up week in, week out, just doing exactly what I said I was going to do. Coming in at the bottoms, ends, or ranges, and here's last year's list, right? I mean, you could see how many, you'll see all the yellow lines. It's the same logic. Doge coming in at the bottom end of the range. Look at this. We got 2 doubles up. Bang, bang. Some of these haven't performed. They're just sitting there. This one's underwater. Other ones, geez, our little sis. This one was crazy. But same logic. There's our cause. Banging out doubles. Doing our thing. I think that was the double. In fact, actually, there was a double and then another double. Yeah, we might even have gotten another double off on this. I don't know. But point here is, I will do exactly. Here's another one. This storage. Remember that storage? What a great rally that was. 2 doubles off on that one. Actually, that was that was a sell half on a double of an entire range. So, point here is, this is exactly what I do. It's kind of boring. It's just managing money. I'm patient, and I do these videos every day, so that I'm here every day. And of course, we have a very active community, so I guarantee you, if one of these things is popping, somebody in the community is going to be like, "Oh, hey, pay attention over there." So, any one of these, anyone. Let's take this radium. Actually, this one's funny because there's a guy on the site who he should have made a lot of money in that last cycle, but he didn't make actually, you know what? I think this is a really good analogy. I won't name names, but anybody on the site, you probably know who this is. But this person, he was at the daily briefs and stuff, and he took all the education programs every single day. But he never made the transition, and you have to force yourself to make this transition from this participant to this participant. This particular person never paid themselves when the market went up. Tisk, tisk, tisk. Because we all know, and now you've been doing this for a while, what goes up quite often has to come right back down, right? So you better make damn sure to pay yourself when these damn things go up. That person was never able to make this transition, and it was kind of sad. We sort of ran into him recently, and he's like, yeah, still own all the coins that I bought down at the bottom. So this was one of his babies. I mean, this son of a bitch should have been like flying Lambos, not just driving them. But anyway, it's here nor there. But guess what Brian's coming doing? Buying at the bottom end of the range. And, this reminds me a lot. I did this one coin last cycle, Verge, and I bought it at 2 sats. And I mean, it went absolutely stupid. I won't even show you how high it went. It was just ridiculous. This looks like exactly the same story. There's really no difference. So, in 2 or 3 years, could we see a name like this even bumping up against these old highs? Absolutely. Is it guaranteed? No. And this is why, nanny nibbles, little old ladies, if you picked like 20 of these and you just were in just, 1% buy, 1% buy, enough of these are going to jump up here that it's definitely going to make it worth your while. And my hunch is you'd be talking Lambos then. So, about 150 BCSs. Now, the worst problem, and this is the hardest part, is, ironically enough, now it's actually really easy to have this conversation with the public. This is super easy. This is, there's not much risk. Of course, are we banging out Lambos today? No. But I would actually argue that this is very low stress for a guy like me. It's in times like this, and I remember going through this, right? Because TRI sells these courses and all this crap. And, right through this one, now this probably isn't the best example because most of these altcoins went absolutely apeshit through that cycle peak. If anything, that was probably a tell that maybe we're near the end of the cycle. How about this Civic? I think it was pretty uppy. Yeah. Well, anyway, there was the 2018 peak. So this is where most of the public's coming in, right? And just asking me, Brian, should I buy this thing here? Should I buy it here? And I'll say things like, well, you can think about reload zones, which means you can start nanny nibbling. But even now, they're sitting there going, fuck, Brian, I'm sitting there like, 80, 90% underwater on my nanny nibbles. And ironically enough, I would actually say, well, you just got to be patient and just wait for the counter trend rallies. My hunch is if this thing is legitimate, we will be back up trading into that wick at some point down the road. And that's when you ring the register. And that's the way nanny nibblers got to sometimes behave. You got to sit there and do nothing for a very long period of time. So, ironically enough, doing these kind of public videos right now, this is easy. This is slam dunk. This is no-brainer. And yet the irony of it all is would it be kind of hard to convince the public to come in on the buy side in crypto right now? I mean, maybe Bitcoin, Ethereum. On balance, if you talk to the public about buying and loading up on shitcoins right now, I think that would be a pretty tough sell. And ironically enough, that in itself is one of the reasons why it's probably attractive. So, just, understand that a guy like Brian who doesn't have a huge, I don't need this money tomorrow. It's, in my eyes, this is money that's working in the market. I'm allocating assets. I'm putting money into work into things. I don't have a problem whatsoever coming along and accumulating all of these and just sitting on this stuff for the next year or so. That doesn't bother me one bit. So just be aware of that, okay? What's Chook saying? Chook's is saying, I thought exchanges didn't allow you to hold positions for months and months. Not quite sure what you're referring to there, Chooks. Hey, are you hanging out over in that harmonics room? I hope you're working with those guys. Remember our agreement, sir. I mean, if you're talking about cryptocurrencies, my attitude is, why not download the wallet? Why not just put the coins on your own computer? Forget about these crazy centralized exchanges. If you want to go the lazy route like me, I leave the coins on the exchange. But hey, Cryptopia, poof, gone. Mount Gox, poof, gone. Fjord, I see, is in the lounge. Do I dare touch his sore spot? I won't. I'll let him off the hook today. Quadriga, poof, gone. If there was an Achilles heel of this space, it would definitely be these centralized exchanges. And really, the irony of it all is, I think you could make the argument that centralized exchanges is kind of a bastardization of this whole cryptocurrency concept. It's kind of going backwards. So, of course, there is DeFi, so we probably ought to let's have a fun conversation about DeFi. I guess the way I look at DeFi is I get the distinct impression this is the future. And I get the distinct impression that there are probably a lot of these centralized exchanges that are really worried about this development within this space. This happens to be, ironically enough, an index of these DeFi names on one of these centralized exchanges. Isn't that kind of breaking the rules, Brian? Remember Brian's old dinosaur. If anything, we had site member Farmer Dave come on recently to try and explain to the community the benefits of the DeFi space, and I gotta say, features, benefits, there's some pretty damn attractive features. Quite a few really sexy benefits. I for whatever it's worth, like my opinion really means anything, I do believe that that's the future. So, I think this is probably more a question about technical, can you stretch the rubber band indefinitely in one direction? And the answer, just simply put, is no. There are a bunch of technical tools that have been built over the years, things like relative strength indexes, stochastic oscillators, that can sort of graphically, visually sort of show you that stretching the rubber band too farness. So you see on this screen here, for example, this is the relative strength index. This is a it's a heavily modified interpretation of that stochastic oscillator concept, the Williams percentage R index. But the point of the matter here is they both basically do the same job, identifying overbought and oversold conditions. And, if you're relatively new to trading, this is a concept that, is fairly core to most half-decent technical traders, is just simply appreciating if a market is overbought, it doesn't necessarily mean that it's bad assets. It just simply means that there's too many people on the long side of the market. And at some point, technically, the rubber band has to reset itself. That's all these tools tell you. So with that said, this is a pretty good graphic illustration of basically what does a one-way market look like. And you use your, these are called price momentum oscillators. You use your price momentum oscillators to identify that, gee whiz, maybe I should not buy. And sure enough, boo doo doosh doo doosh boo 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 boosh. All those momentum oscillators start cleaning themselves up. It doesn't necessarily mean that the asset is good or bad. It just means technically this market has just got too many buyers and not enough sellers. Remember, this universe, it's like everything. What I've actually come to realize is that just like the orbits of these planets, if we were in the dead of winter, middle of December, and you didn't know better, you would just think that the weather is just going to continually get colder and colder and colder and colder and colder. But mysteriously, a cycle turns, and the weather starts getting better. And then conversely, at some point that cycle ends, and we go back the other direction. It seems to me that this entire universe is built on that premise, this whole idea of these cycles. And the more I study assets and asset price behavior, the more I see that really asset prices are entirely subject to these cycles. So I would just simply say that, as we were heading through the latter part of the summer, we were starting to get a lot of sort of technical, anecdotal evidence that that in this DeFi space is super exciting, super positive. The future, it is where we're going. Great technology, but just technically, the market was just getting too tilted one direction. We do try to teach in sort of a hidden way that you can use these indicators to tell you about potential future price action is this concept called divergence, where these oscillators actually start weakening even though price is actually moving higher. So, in this particular example, and again, it's not really a commentary on whether DeFi is good or bad. It's just, hey, the mathematics. Think of, and really this is the end of the summer, right? So this is the exact opposite. The weather's getting better, right? Of course, 2020 crazy year, but generally humans feel a lot better as we go through the summer, right? And, we're out barbecues, going to the beach, just enjoying life. Then all of a sudden, oh boy, we got to shift back into a different world, the working world, eh? But the point here is that quite often in the market, you'll get little anecdotal tells that, hey, something's not right here. We're not nearly as bullish as you think we are. So these are the kind of little technical tools that help us. Like I had said earlier, all our new students, new people to trading, you should, at any given point in time, be building your universe, your ideas. Hey, I really like this idea. I like that Vitalik guy. He's, man, he has got one hot body. And hey, I'm not the last guy in the world to be talking about bods. Just being stupid. But that doesn't necessarily mean technically it's a good buy. Now, the people who really make a lot of money in this world, they identify good ideas, and then they are two words. Let's see if anybody on YouTube, I've been blabbing away here for an hour. Yeah, time to wake up, do some work. Two words. We all must know them, live them, abide by them. If you want to make money from trading, actually outperform the market, not little old lady stuff, but hey, I'm in there, I'm a trader. Two words you have to exercise without a shadow of a doubt if you want to win at this. And nobody's answering. What are those two words? Vitalica. Well, not quite. Two words. All traders must live by these two words. Tweet posted on June 5th, 2017. Everybody knows that was when the real bull only just started. And Brian's wanting to get out. And actually that's really important, right? Is that you have to identify the end of the move. Right? So I was already trying to create my exit strategy, and then my business partners were like, well, Brian, we're just getting the business going. You can't leave now. Thank you, Andre. Andre's going to be fucking stinking rich, I tell you. I think this guy gets it. If we can just somehow figure out how we... hey, Andre, I want you fogging bombing. Hey, all you guys go, look at that. Nobody's answered over there on YouTube. Somebody says, get oyade. Nobody on YouTube knows these two words. Two words all traders must exercise. No. Starts with a P and a D. What he said. Yeah. I'll tell you, man, Andre, man, he's going to be stinking rich. All you got to do is just... Yeah, in fact, actually, Andre, all you got to do now is just exactly what I'm saying right now. Just let the trades come to you, look over in the corner, and you just go, holy shit, there's a big pile of money just sitting there. You know, actually, I had that happen the other day. I had that. It was so beautiful. I love when that happens. You know, what's so funny about this crazy business is that people actually try too hard. All you gotta do is just sit there. All you gotta do is just sit there and just say, you know what? I'm only gonna act when I look over in the corner and I just see a big pile of money just sitting there. All I gotta do is just walk over and pick it up. Nobody on YouTube has those two words. Gee whiz, incredible. See if anybody in the comments, we'll leave it later on, see if anybody can get those two words. What are those two words? All traders must live by them. Hey, there you go. Thank you, Kevin. No, that wasn't Kevin. That was the pragmatics. All right, pragmatics. There's Colleen. Colleen coming in for the win. So, you know, like something like Ethereum. Love Ethereum. Oh my God, Ethereum's the next best thing since sliced bread. Okay. Can you see if you were, I mean, like all through this, you have to have the patience and discipline to leave that alone. But do you see that, gee whiz, the market comes down, puts in a bottom, then another W, and then, okay, here we go. And there's a big old W. What's really interesting about Ethereum is it did this dump. And what's fascinating is Bitcoin did exactly the same pattern through its 15-16 bottom, almost identical to this. So the irony of it all is you can't even say that this wasn't really well telegraphed. So have the patience and discipline not to chase. You want to make it really easy, nanny nibbles, little old ladies. And I'm just using this chart off of Coinbase. I don't know what low you want to do. All right, fine. As soon as we get at or below reload zones, I can actually officially start nanny nibbling. So, maybe once a month, once every couple months, you're just nibbling away, nibbling away, nibbling away. Once you get to 5%, I think you probably ought to cool your jets. And frankly speaking, anybody who actually could take 5% of their net worth and actually allocate it towards Ethereum down in this area, oh, fuck, you're going to be made in the shade as far as I'm concerned. I mean, everybody should look at this chart and go, gee whiz, that kind of looks like a letter of the alphabet that Beamish guy kind of likes. What happens if I do this? Wow. Are there any letters of the alphabet that technicians kind of like to see on these longer term price charts? I mean, gee whiz, you see it on these long term price charts? Holy frolies. It's ridiculous. Oh, by the way, I'm going to get some coffee right now. I'll be back in a bit. Somebody want to put on some musical interlude? Where's Shane and his baby elephant? Alright, well, guess you guys didn't like that too much. Anyway, it's probably good to leave that picture on the screen there for a few minutes and let you absorb that. That's a hell of an image. So, it's actually kind of cool is we have, I think, the big sort of fundamental catalyst coming up here. Yeah. Oh, thank you, Oscar. Thank you for helping out there in the lounge. Oscar helped Chooks. So the way I actually look at something like this is we've put in some sort of base here. I think that makes sense. And technically speaking, I think, patience and discipline, those are the two words. You might all three. You remember Vitaliki was doing music videos, right? When these computer programmers are doing music videos, what's so funny is Vitalik himself was saying, the price of Ethereum should not be this high. You're ruining my computer. He's doing music videos. He's a rock star. Chicks are throwing their panties at him. Is that really a good investment window? So comes down, puts in all these crazy W's, letters of alphabets Brian likes. Is the public really that interested in crypto right now? Not really. And just like I showed you with all those shitcoins, I would have no problem whatsoever if somebody told me, Brian, I am on an accumulation path on Ethereum. And ironically enough, even from a longer term perspective, you could actually still say, well, you're at or below reload zone, so I'm still doing my nanny nibbles once a month, just buying. I wouldn't have a problem with that. You want to try and time your purchases a little bit better, technician, outperform, all that kind of fun talk. For God's sakes, let's see on YouTube. What is Brian going to say to you if we see an asset that's gone straight up like this when we're up here? What's Brian going to say? 2 words. First word starts with a D. Second word starts with a C. No other serious YouTuber, LOL, would do that. What did I do? I'm such an idiot, eh? Oh, go get coffee. You like that? I just walk off. Yeah, very good, YouTube audience. Should I leave for a couple minutes? What an idiot Brian is, eh? And now a word from our sponsors. Oh, wait a minute. We don't have any sponsors. I don't think anybody would want to sponsor me. Are you kidding me? That guy's a fucking loose cannon, man. He's going to take off. He's halfway through the show. He's just going to get up and leave. I could do a coffee commercial. That would be kind of funny, eh? All right, yeah, okay, back to the show. I gotta get serious. More downvotes. Come on, let's get those fucking downvotes going. So, point of the matter here was, for God's sakes, don't chase. And very good. Everybody on YouTube got it. Way to go. Now, like, when we were going through this, did anybody take the time to journal their feelings of FOMO through here? Anyone? I definitely, man, you don't know how many fucking messages, PMs on the site I was gotten. Man, Brian, I'm feeling the FOMO. Oh my God, I'm feeling the FOMO. Please help me do something. Oh my God, I'm feeling the FOMO. And I leave the door open. That's even worse. So, anyway, Colleen just said something there. I'm funny. Hey, Shane does a really good job cleaning my computer. Come on. The fact that he calls it moving air aggressively in one particular direction and it's work, well, okay, fine, you could call it that, but he's just cleaning my computer. Nope. Everybody wants me to talk about blowjobs. All right, I guess we'll stop. I'm gonna leave now. Bye, guys. All right, that should get some more downvotes. Come on, give me more downvotes, cocksuckers. All right. Wow, what a weirdo. Is Shane here? Shane's professional. Yeah. I think we should open up a business. That would be so funny. Brian is on one today. I know. Jesus. What the question is, what is he on? Hey, there's some more downvotes. Thanks, guys. Way to go, guys. Awesome. You're the best. Hate you. All right, back to our conversation. So, don't chase, don't chase, don't chase. Rah, 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 rah. Remember I said that little hint? What? And let's see if you guys were listening. What would we maybe want to see up here that would just sort of tell us that, hey, you know what? Maybe this kind of shit's about to happen. Is there something up here? Hey, what do you think, Megan? I haven't really talked to you too much. Are you having fun on the site? Well, even before that. I laughing like crazy. Oh, right on. Cool. What did we say? Of course you get it, Kavarki. You're not allowed to answer. It's so funny. I said I do all these questions and I'm hoping that the new people go, oh, is that a divergence? Are the YouTube police gonna kill me here? I bet. Mind you, it's funny. It could, what would be kind of cool is to chart the up and down votes, because now I see the down votes are going down. So what the hell's going on there? Are people allowed to take their votes back as they go along here? Maybe that's what's happening. So anyway, okay. So something you're going to learn from this video, because this idiot here is wasting my day, and there's got to be something I can take a value out of this. If we go down to the daily chart, what we actually see here, and we pull up things like, let's go, what's the most recent one I've been doing? I think it's this one. We notice that as things were moving higher, things like our momentum indicators were not making new highs. We did RSI for you there earlier. It's kind of cool if you're just watching these videos for first time. There are other videos that I do through, and people actually put together like references. So look in the comments and stuff. You'll see. Just hunt for RSI references and stuff. But here you can see this relative strength index is making lower highs, even though the price of the asset itself was making higher highs. That's a little tell. Right? Everybody should have been looking at this going, there's something wrong with this picture. If this is the case, then price isn't really as strong as what price is leading you to believe. And sure enough, badoosh doosh doosh, over here, we got to clean all that up. I would say, 9 times out of 10, just respecting this message will keep you out of a lot of trouble. And then if you can just somehow remember back in the back of your head, don't chase, don't chase, don't chase. This little tool here, well, let's call it a big tool, because I like when Shane uses his big tool to give me blowjobs. Oh, that's terrible. There you go. Somebody get that soundbite. But that doesn't make sense. Would he use his big tool to give a blowjob? Oh, boy. Shane. Yeah. I'm terrible. Now, those definitely deserve downvotes. Okay, so, learning information, massive divergence. Now, the good part about this is we would say now this divergence is cleaning itself up. We might even actually, well, we're not going to, but it would have been kind of cute had this low here been actually higher than this low, but it's not. So this is still pointing down, although it doesn't really look very down. For us to really know that momentum is actually pointing higher, obviously we want to see these things pointing up. So because we just made a new low here, ironically enough, did price actually make a new low? I did on a clothesline basis. This is still kind of weak. Now, there are some people, the fact that RSI did make a new low and price here did not make a new low, they would call this a hidden divergence. The only problem I have with the hidden divergence concept is it's very hard to actually frame in a setup. So I don't really talk too much about hidden divergences because I've never actually heard anybody say, okay, well, in the trade setup process, this is where hidden divergences will help you. People will point them out. Hey, wonderful, great. But I don't really find it helpful as a trade setup tool. Having said that, what I would just simply say here, if I was looking at this Ethereum, trying to figure out what sort of our direction is, I would just simply say it sure looks to me. And notice there's a nice big node up there on the volume profile. So let's call it 395, which would just be underside kisses of $400. I think that's your top end of your range. And very simply put, these lows, especially off of that railroad tracks, that's the bottom end of your range. So for now, there really wouldn't be a hell of a lot for a guy like me to do. You can see right now, sitting at 350, we're basically right in the middle of the range. We could easily wash both levels here, no problem. Also, too, I don't like, for the bullish perspective, I don't like how this was a new closing low. Because really, for an old gnarly technician like me, I have to be thinking continuation pattern. Thinking things like market structure. And what do you think, guys? Can you start seeing some stuff align here that's not really bullish? So you'll notice the 200 period moving average. You notice that I think that's Mountain Man. You notice that's also a previous structural breakout level. And notice there's a node right there. So, remember we had said a technician, really what they're trying to do is they're trying to identify that edge where, hey, I've seen this happen so many damn times that usually when this, and this happens, well, that usually happens. So here's a situation where I would say on the event of this A, B, C, D harmonic price pattern, and keep in mind at this level, this is what's called a PRZ. Level 3ers are just doing this right now. Alex, are you here? I swear, never seen somebody get so excited when I released the harmonics document. There he is. Alex almost had a heart attack. We literally lost him. Okay, that's it. I'm gone. I got harmonics. I'm happy. It's been beautiful. I love that. It just makes me so happy when that happens. Anyway, this level right here is actually a potential trade location. So harmonic people, they're starting to get hey, when price hits this level, usually that happens. So that's a reason to pay attention to that level. Oh, gee whiz, what the hell is this? This is the 200 period moving average, or basically the average price over the past 200 periods, which acts as a pretty good sort of, think 50% level kind of idea. And as we said on the volume profile, actually we have an area where a lot of people have taken a lot of interest in the market previously. So if I was like a bull, an institutional player, and it should make sense, right? We broke out here. I'm a bull. I bought here. Look at me. Woohoo. So it should make sense. There's a lot of people like on Wall Street and all that kind of stuff that are like, hey, don't take the price lower than here. This is where I bought. Can you see that? Right? And then we said we had another one right up here. And really what usually ends up happening here is this profile ultimately wants to look like a parabola. So what this really then is implying is, wow, this is all unexplored price action all through here. And by the end of this process, this profile will look all filled in. So what do you think? Has this thing got some work to do here? I think so. Reasons for a trade. Well, I see that we've got this PRZ at 250. We got the 200 period moving average at 250. We've got this node, bottom of the profile, at 250. This is what we call the POC. That to me sounds like we got a little bit of a trade location developing here. Do you see how that's building edge? What are the odds that we come down into this area and knock off of there? And in essence, professional traders are going to try and buy here, looking for this rally window, and maybe they hunt a W, and they're going to risk that looking for that, right? Or all the squiggly line crap. And that's really like a trader's life. You want to try and hunt those edge levels. So here we are right here. We already have the market sort of pointing down anyway. Right? It broke down through that. Remember I said I didn't like that low. Have I got edge to take a shot here? Knowing that the odds, and really you can see, just even if I risked against previous lows, I got to risk down to here. What do I have to see if I take that risk to actually justify this reward? Well, really, ideally, I'd like to see at least a 2-to-1 risk reward. So that means that really, just to justify taking the trade, I don't even know if it's going to work or not, but I have to realistically see a price objective up in here. Maybe that can happen. A serious test of these old highs. It's not out of the question. But this looks to me like, assuming that this low will hold, it literally looks like a toss of the coin. Do we come down here, even flush that low, stop you out, and then actually W out and work higher? Sure, see that all the time. Piss you off, fucking assholes. But it does happen. The only reason why I like W's is because at least if I buy this W, I got two lows. So maybe they go after this low. We call this the noob stop because on W's usually they do go after that low. But this low holds in, and this is where I'm going to put my stop. This low holds, and then it goes up. And you're like, whew, that was close. And actually, there's a good example in the stock market that did this recently. It was on CCL. Came right back down against its recent lows here, held the lows, and starts to crank back up. So, as it stands right now, I can't justify. Don't have trade location. Trade location for me is down here at about $250. And at that point, in fact, what I'd love to see here is the market come down, break these lows, so we actually make lower lows in price, but our momentum indicators do not make lower lows, and they actually start making higher lows. And what do we call that? Kevin, you answered it before. If we get that on some sort of rally here, then if we actually get a nice W that comes in here, I actually got a half decent setup, because then I'll have confirmed divergence, I'll have location, I'll have market structure, I've got a whole bunch of edge, which implies that if I take this trade, the statistical odds of the market working up into, and really my hunch is probably the technical objective of this trade is going to be nothing more than just a 50% retracement of that previous range. Yeah, right into there. So then what it becomes is, if I buy this W after we've had trade location, after we have had divergences confirmed, I buy this W in price, I've got market structure, and I risk to the 50% rule, can I see a 2-to-1 risk reward? And I just eyeballed that. You can see that would come out to 2.221. 2.2121, beg your pardon. And that is a trader's life. Pretty exciting stuff, eh? So, can I do anything right now on Ethereum? Well, I mean, I could, but I don't really have any edge. I don't have any way to know that, well, if I buy right here, the statistical odds of it going up are actually in my favor. In fact, when I look at this here with the confirmed M breakdown, with the moving averages sitting bearish, with this huge open gaping hole in the profile, with the 200 period moving average sitting down here, with the RSI breakdown still technically working, I think the statistical odds are that we head down here, not up here. So there's no fucking way I'm going to buy. Now, like I said earlier, and probably why don't we finish on this? I would ideally like to only participate in the market when I look at something in the market and I actually say to myself, Brian, you would be an idiot not to buy that thing. A famous market technician, you've probably heard him before. What's corn doing? You see the same thing here on corn. Right now, I got nothing. There's just nothing here. I'm not really in a great shorting location. I'm not really in a great buying location. If I'm thinking trend continuation, I'd like to see 3 higher lows. So, I mean, this is a terrible place. Fucking Hogue, he would shoot me if I bought right here. Based on what this profile looks like. I mean, this looks... I got nothing. I'm sorry, Omar. Omar went, the corn! Sorry. I got nothing right here right now in either direction. I mean, ideally, I want to try and hunt shorts up here or longs down here, but right here, I got nothing. Back to what I was saying there a few minutes ago. What I want to do, fucking these little pot coins. Speaking of which, I think these little pot coins are an example of this. I don't know what the hell they're doing on this POT, but something's brewing here. Maybe it's just the bottom end of the range. I don't know. I thought I saw something going on there. This THC, what a funny little character he is, eh? What a cute little W there. Pow, and then right back down. I want to show you a stock, because this stock to me is, it's like, maybe I've been playing this game just too damn long. But this is that Jimmy Rogers kind of thinking that when you see something and you just look over and you see a pile of money just sitting there, all you want to do is just walk over and pick it up. And I had a stock this week and I love TRI's website because we're all about 1 + 1 = 3. We all work together. There's no way, I guarantee you, no way you're going to see everything in the market by yourself. It's impossible. So, I've got one group of educated market participants, a whole bunch of site veterans that we meet every Tuesday. And we just talk stock, right? And just, hey, take a look at this. Hey, take a look at that. And one of our OGs who, by the way, tried and failed to get us to buy his Tupperware idea right fucking here. Look at that shit. I mean, this is swear-worthy. Would you like to buy stock here and see this happen? I mean, that's why you're all here, right? Did we buy? I don't know. Do I really want to get in the 1970s story? Well, you tell me. Their money is just as green as everybody else's. Anyway, on Tuesday, the same gentleman was, well, I'm finding some interesting action in the medicinal mushroom industry. Okay. I mean, I look at this chart, and this is classic. I look over in the corner. I don't know whether it's going to go today or tomorrow, but this has just got money written all over it. It's just screaming money. Do you see how different this image looks like than, say, should I go and buy some Ethereum right here? They're apples and oranges. Completely different. So, this is the kind of stuff that really gets me excited when I see price charts that look like this. Now, remember, Ethereum did look like this, but it just doesn't look like this right now. Hey, maybe some of these pot names are starting to look like that. I don't know. Do your own due diligence. But, you look at Ethereum. Does that chart look like that mushroom stock? Does it look the same? If you can understand what I'm trying to get at here and understand that the market will actually make this incredibly easy on you if you just are patient and disciplined and just be it's your money. Buy the saucer bottoms. I mean, I tell you, when ETH was looking like that, when I see that, I'm like, fuck. Right? I mean, and this was, in my opinion, this was the time, right down there. Beautiful. If I saw that, I'd be like, damn, let's get all over this thing, 50% levels, whatever. But, and interestingly enough, this is a great analogy, generate free positions, typical crypto. This wasn't even anything to do with Ethereum. This was all to do with, COVID. They slammed the lows, put in a big old W. You could have come to me and said, well, Brian, there's a W. I'm going to buy, anywhere. I'm going to buy this level. Okay, that's fine. You're playing that move back up. But here we are here. Does that look the same as this kind of thinking? I don't know. I mean, maybe, but, I really like the easy money. And in a weird sort of way, me coming in and buying the bottom end of ranges on a lot of those names is kind of like that easy kind of money thinking. Where the hell did that thing go? Maybe it was a different screen. So, when I see stuff like that, I mean, I just had to buy something. I had no choice. That's just beautiful. And to me, this is easy. When I look at something like that, to me, that's free money. And if I can just keep concentrating on doing this kind of stuff, and, Bitcoin, here's another way to look at Bitcoin. You could make the argument that, hey, we're going to be fundamental analysts. And we're going to invest our hard-earned money in this asset at what it's worth, what its actual intrinsic value is, i.e., how much does it cost to actually make one of these things out of the ground, right? A computer and all that. Are we sitting at that price right now? Well, no, we're not. We're sitting at about a 50% premium, maybe even as high as 70, 80, 90% premium. Do you now see the difference? I hope you do. I mean, here, when I look at an asset like this is, you might make money, you might not. Could easily go up here, could easily come down here. That's not edge. It's you're gambling, right? It's going to Vegas. In fact, I would even say, looking at this chart, V bottom, blah, 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 divergence. Actually, the odds are actually slightly against you from it going up here, but it might do it nonetheless. But that's not edge. I want edge. If I can get Bitcoin to come back down into reload zones at the cost of production, then fucking buy the shit out of it. But right now, I don't have edge. I mean, maybe I have continuation patterns, but I don't have value here. That's just the way I interpret this. So, okay. I think I've said my due here for today. Off to give Liam. It won't too, Sean. You have to the 20-week moving average. All right. I personally like to follow the 13-week EMA and 30-week SMA, as that's actually a really great trending tool. So whatever direction those two moving averages are pointed, in fact, actually the level twoers are going to be doing moving averages this coming week, so they're going to be all hip deep in that. Following the rainbow crosses. That's one of Seward's favorite indicators, so that should be a fun conversation next week for them. Okay, I think we're going to leave it at that. Did I answer all the questions, Kevin? Maybe I didn't even answer. That would be terrible if I didn't. Oh, goodness. I remember I tried to answer one and, of course, got totally derailed. Did I answer these? Let's see. All the capital that is around has just a kind of a virtual. What? Oh boy, let's try that again. All the capital that is around has just a kind of a virtual, provisional, or borrowed value, and gets only a real value when something like food, goods, or services are consumed with it. Okay. The capital in the capital market is potentially used for consumption at some point. When looking at valuation total capital of the asset classes in this context, there seems to be a huge imbalances. If we would consume something for all the capital that exists, the value of that capital would collapse to a fraction of its current value. Could you explain more about that? Whew, that's a mouthful. Well, looks like I'm going to be here another half hour, 45 minutes. Sorry, everyone. Do got to get going there. I have to be on the road here in about an hour and a half, so just be aware of that. I don't know. What do you think? Should we should we tackle this today or put this off to next week? I mean, it sounds like a fun conversation. I'll give you my 2 cents. Okay. All of the capital that is around is just a kind of a virtual, provisional, or borrowed value and gets only a real value when something like food, goods, or services are consumed with it. The issue with capital is that it can be stored up over time. So I agree with you. Something like a store of food could in itself represent a capital asset. I don't know if that's the right word. But what usually happens through the barter system is that that asset is monetized. The worker who consumes the food should theoretically exchange some sort of barter vehicle of capital, of wealth, to the person who owns the food store as a fair exchange of goods and services. So the capital hasn't been destroyed. It's just been transformed. Yes, it gets consumed by Joe Sixpack. But remember, they got the food in exchange for, say, something like the labor that they exchanged for, now it could be fiat, it could be gold, it could be seashells, it could be feathers. That doesn't really matter. So, I agree that these, foods, services, second oldest profession in the world, there is a barter that goes on for the exchange of those goods and services. And the capital really isn't destroyed, it's just transferred. So, Mr. Farmer was sitting there with a big pile of grain. He's now sitting with a big pile of feathers that in this particular society, they associate some sort of monetary value towards the feathers. But the capital's still there. So I'm not quite sure I agree with that statement. I believe that, you could actually argue that the the net worth of a country, look at what's happening in China right now. The net worth of the country just keeps going up. Month after month after month, year after year after year, because more capital is going into China than capital is coming out of China. So, is that in the form of feathers? Is it in the form of gold? Is it in the form of U.S. Treasury bonds? Is it in the form of U.S. dollars? Is it in the form of euros, euro bonds, Canadian dollars, Canadian government bonds? They are all just different forms of capital that have at some point been bartered or exchanged for, whether it be man hours of labor, that's an excellent sort of capital generator, or agricultural products, or, and this is where our growth society comes from, the value added to taking raw commodity products, reforming them, and then selling them into the marketplace at a profit. That, in essence, is capital creation. So those are three very different, very unique ways that capital can be created on a regular basis. And in essence, the first form that I told you, raw labor, I don't know whether you guys have noticed, but one of the key causes or drivers, they say, of our economic expansion over the past 50 years is purely a function that those workers are more productive for every hour of labor that they put in. They are making more capital with the same amount of work. So the capital base increases, net worth increases. Money multiplier effect kicks in. People have more money. They're more productive. They invest those dollars in other things that make more productive, and it feeds on itself. Okay. Somebody here has said now automation is further replacing labor, but could you also make the argument that automation is actually making the companies themselves more productive? So that's going to fuel even more profit margin. So remember, we said there's three parts to this equation. You can have the workers earning money, and then of course if they're more productive, that's more growth. You can have agricultural growth, and also too, pulling assets out of the ground, oil and gold, and chopping trees down, right? Commodity wealth. Those grow back every year. You could argue like making the workers more productive at the factories, GMOs, genetically modified organisms, might make farmers more productive for every acre of land that they planted. That's another way to increase production without increasing wealth, right? But we also said the third way was corporate profits and corporate earnings. So interestingly enough, this might become a very interesting battle between, do corporations make so much money from automation, their profit margins are so big that they can actually offset the losses that all the schlubs who aren't working used to provide to the economy. And actually, this is an interesting direction, because I think this is the direction our society is going in. In that, have any of you guys heard of the K-shaped recovery? Because in essence, you could make the argument that the K-shaped recovery is basically business profit margins, and of course the commodity sector and all that doing perfectly fine, but the labor pool not participating. Why? Because, sorry humans, help wanted, but humans need not apply. So we might, and sadly this could be a really dangerous path that the human species goes down, because, for a very long period of time we like the idea of us being equal. And we're now starting to lay the groundwork for class societies again. Like hundreds and hundreds of years ago, we had revolutions to try and get rid of these class societies. And thanks to people like Mr. Bezos and Mr. Zuckerberg and Mr. Gates, we're moving very quickly back towards, Mr. Monks for that matter, we're moving back towards that class society. Good question. I hope that helped. Martin, are you here? That was a big question, wasn't it? Considering I was just about to wrap this up. So, Martin, is that you? Martin A? Martin A. Bill? What I was referring to is the fact that the equity markets and the fixed income markets are much bigger than the commodity market, not to speak about the derivatives. Well, definitely, because remember, first and foremost, would equity be valued at book value? And, you haven't done or are you in the level 1 program? Where are you? I guess so, if you're asking a question here. You haven't done the fundamental analysis module yet, which I guess is next week or the week after. And really, it's an introduction to what equity is. And if you actually understand what equity actually is, then by definition, it shouldn't trade at book value. It should trade at a premium to book value, because in essence, it's a bet that these companies are going to earn money. That $1 invested in the company is actually going to earn like $1.10, $1.20, $1.30, whatever. So equities, by definition, should have a premium built into them. And with that anticipation of growth. The fixed income market is purely a how do you say this? It's probably the oldest form of and the most conservative form of investing, if you will, where I'm just going to loan you some money. Right? I mean, that's pretty commonplace. Like, the idea of actually being an equity investor is actually an extremely modern concept. Like 100, 200 years ago, I guess 200 years ago, we'll say, equity didn't really exist. That was this idea that you would just give a company blindly money. You had no sort of guarantee of the assets. It was just under the impression, the understanding that the company is earning money, so as a result, it should be more valuable down the road. And since equity just does nothing more than just reflect the perception of value of the company's assets, if the market believes that the company is growing, then the price of the asset in the marketplace will grow as well. It's a big leap of faith to invest in equity. And, in the 19th century, there were classic crooks that literally stole just ridiculous amounts of money from the public who invested in company equity, and it was all just a scam. Kind of like shitcoin shit you just saw there, the ICO pump nonsense. Same thing. So, the idea of loaning people money goes back forever in human history. And usually what like investments were in the past, like if you think of like Christopher Columbus, Marco Polo, same sort of thing. Wealthy individuals would loan money to these people and expect to be paid back when they came back from their explorations, and participate in a portion of whatever the spoils of the expedition were. So if they came back with a whole bunch of gold, I lent you the money to go and buy your boats and your crew and all that. I want to get paid back the money, and you're going to give me a certain percentage of whatever it is you come back with. And if you didn't, they would throw you in debtor's prison. And quite often you would just never leave. In fact, not only would they throw you in debtor's prison, but they would actually throw your whole goddamn family in debtor's prison, which made no sense whatsoever. But anyway, crazy world. And sadly, I actually feel like we're heading back to that world, which is scary. But oh well. So, how do we say this? The size of the debt market itself is a funny creature. Technically, countries don't really need debt. They don't. They have the power of the purse, and if they mandate that their citizens must pay taxes on an annual basis, then technically they should be able to fund all their operations out of those annual revenues. The problem here is, why does debt exist? What's the purpose of it? And sadly, of course, debt is a great way of sort of enslaving people. And quite often, those people that were in the financial services industry over time, is a great business model to be in that sort of intermediary of debt. Also, too, and this goes all the way back to the Bible, people who were in the money-changing business, very profitable business to be in if people must change their currency from one form to another. So it is very profitable to be in the business of money. It's very easy to, especially with like egotistical, maniacal despots running around, like medieval Europe, for example, waging wars on their neighbors for conquest, to go to these money lenders to finance wars. And of course, once you have borrowed the money, you are now the money lender's bitch. What's really interesting, the money lenders, is they can actually take over an economy because they will use that debt that they know will be serviced. The interest on that debt will be paid by the tax revenues that come in. They're not really in a big hurry to get paid back the debt. What they really want is they want the interest. But what happens here is, since the government revenues are guaranteed, that means that those, and you see, like I heard in the United States of America, there's nothing in the constitutions about the Income Tax Act in the U.S. Constitution. Nothing whatsoever. This thing called the income tax was just introduced shortly following when the bankers took over the U.S. banking system. We were talking about this in the level 1 class and in the lounge this morning. Do yourself a favor, do some research on the Jekyll Island. Basically, the banking cartel took over the U.S. economy. And what's worse is they even passed the legislation through the U.S. Congress very suspiciously and almost borderline criminal. But there's absolutely nothing you can do about it because these fuckers are stinking rich. They own a bazillion lawyers. And if they wanted to, they could come and just make my life absolute hell right now. Just like that, if they felt like it. Hopefully I'm just too small of a fish and nobody gives a fuck. Okay, so back to our story. So we have a situation where governments technically don't really have to have debt. They have revenue in the form of taxes every fucking year. Why would they need to run a debt? They run debts, of course, because stupid humans, and most of the time it's men, get really egotistical and they want to go flex their muscles and wag their dick around and get an ego rush out of making other humans subordinate to them, which is really sad. But you could actually argue a lot of the sort of debt in the pre sort of modern industrial world was just purely nothing more than just ego-based driven totalitarian dictators running around being idiots. This is interesting, back in those times there were leaders who actually tried to break the banking cartels, and Henry I famously in England created this thing called the tally stick system. And this is a really cool full circle kind of conversation because this particular Jupiter-Saturn cross, it turns out that the last one that was significant as this one occurred in 1623. And if you go look up in your history books, you'll find out that the banking system burnt down the repository that held all of the tally sticks that were a historical record of wealth in the UK right around exactly that time, and instituted this modern day fiat system that we live in. And I think I made reference earlier that we've got some really big long-term cycles happening in 2020. Of course, all of you guys happen to love this thing called cryptocurrency, and my hunch is this ain't an accident. This is actually happening exactly when it was supposed to happen. It's incredible. I mean, this is why I'm so enamored with all this astrology shit. Because it's like, wow. I mean, it's, J.P. Morgan famously said, millionaires don't respect astrology, but billionaires sure do. And that was back when $1 billion was actually some money. So, the problem with our system now is the banking cartels use the government debt that they absolutely know without a shadow of a doubt will have interest paid on it. They use that government debt as collateral. Since they know that the interest is going to be paid on that debt, it is now a collateral asset. Like you see, the Fed's gone in and bought U.S. bonds in the marketplace. What's going on there? Why would they do that? Well, they actually use those bonds as collateral, and they lend out against that collateral. So, by definition, right, if you go to a bank, you want a mortgage, you got to put, like 20% down, 10% down, same thing. So, bank wants to issue $1 billion loan. Odds are there's $200 million of their money. That's the U.S. government treasuries that they have on their balance sheet to finance that $100 million loan. Did that make sense what I just said? I hope that made sense. I think I got the numbers screwed up there. But hopefully you get that. That's the whole reason why the Fed has U.S. bonds on its balance sheet. It's not because they are empathetic of the housing market and they want to relieve the stress. Fuck you. It has nothing to do with that whatsoever. This is a power play. So, these private corporation, the U.S. Federal Reserve, remember, it is a private corporation. Nothing to do with the government. Now, they have all of these basically worthless bonds on their balance sheet. Does it make sense that this private corporation could technically bankrupt the United States of America? Does that make sense? If it doesn't make sense, you better understand that. Really good history lesson. The Napoleonic Wars. One of the Rothschilds famously cornered the British bond market. He could have technically driven the British government into bankruptcy. But what was really interesting was that's not what they wanted. What did the Rothschilds want? Does anybody know the answer? As soon as you understand the answer, then you understand exactly what's going on in the United States of America right now. Same thing, no different. And again, it's a function of why is such a small portion of this human population control so much of this planet's wealth? I don't understand it. In a weird sort of way, people were kind of thinking that, oh, goody, communism, socialism, that will deal with the problem. But the irony of it all is the bankers do just as well under a communist system. They do even better under the communist system than they do under the capitalist system. Under the communist system, it's great. You could just, like somebody just said here, socialize losses. It's really easy to fuck the public over. In the capitalist system, the only way that you can do it is you've got to generate war, just like you said there, Omar, right? At the end result is you're going to basically run one person's credit out. Once their credit is spent, it's done. What do you do then? And the answer is civil war. Basically, that's exactly what happened in the United States of America in the 1850s, 1860s. And what was really interesting was the banksters basically were holding Lincoln hostage. And he was like, well, what the hell do I do? And one of his generals was like, fuck it, just issue your own currency. Tell these bankers to go fuck themselves. And that's exactly what he did. And the guy was like, you can issue your own currency and you can raise all the fucking money you want. And then you could just go kick the fucking South's ass. And Lincoln was like, okay, I'll do that. And that's exactly what he did. And the banksters, of course, they didn't like that one bit. But that, interestingly enough, when you get to the point where the banksters are actually picking sides and they've gotten to the point where they've tried to dilute as much as they possibly can, and they have to break whoever's in power. Then if they bet on the wrong side, then they're totally powerless. So following the U.S. Civil War, the banksters were basically put out of business. And like I said, to start off this conversation, what I would actually consider a real travesty to the United States of America and a real travesty to U.S. citizens is these banksters basically have hijacked your country. Mr. Lincoln had almost had it to the point where, and it's one of the reasons why the United States did as well as it did. Through the what they called the Reconstruction period, and then through the Gilded Age, is that the banksters didn't control the United States monetary system. Then the fuckers basically, to be perfectly honest with you, I honestly think it was criminal what they did in 1913. Totally snuck through legislation to create a central bank in the U.S., which from that day forward, I think pretty much the entire economic history that you've seen in the Western world, especially, sadly, even the creation of people like Nazi Germany and Hitler, I think was all a function of the banking system. And the world that we live in right now, we are the bankers' bitches, whether you like it or not. It's just that simple. It's interesting because we have one site member here, Shane, who brought it to my attention a while ago, that we actually, this year, we have remember I told you, one of these craziest fucking celestial events, we actually have a Jupiter, Saturn, Pluto cross this year. And it turns out that this particular cross is, the theme is consolidation of power. What do you think, guys? Has the 1% consolidated their power nicely through all this? I'd say they did a pretty damn good job. Fuckers. We can't say boo. We're stuck in our cubicles, right? Speaking of which, I gotta go get ready for Liam here. So, I don't, and the worst part about it, right? What I like is I can just sit and rant. And we got like 75 views, big fucking deal. So what? It'll be fun if somebody can save these videos in like 100, 200 years from now. See if anything actually changed. I doubt it. But who knows? I will say, and let's finish off with this. If you are Joe working slub and you were punching a clock and you were thinking that maybe you were going to pay into some sort of pension plan or something like that and you'd live a nice retirement, all of what I said there would be just stunningly depressing, eh? Basically, you're a bitch of the system. There's nothing you can do about it. But the good part about it is, I think that the powers that be, I think their attitude is, if the public doesn't want to take ownership of their lives and take responsibility for their decisions that they make and actually educate themselves on what's a good decision and what's maybe a stupid decision, I don't think that the powers that be, I don't think they really, if anything, it serves their purpose. But you don't have to live that life. And with a little bit of patience, a little bit of discipline, you can do stupid things like take $500 and turn it into hundreds of thousands of dollars. It isn't unrealistic. This is just such a simple little idiot plan that I did. It's almost comical how simple this was. But the key was that we knew the rules, you follow the rules, and you be patient and disciplined. So, well, the conversation about 1% and the banksters and all that, it's there. It is our reality. But it doesn't even affect our fate. It is part of the framework. It's like you're playing the Mario Brothers game. You complaining about the banksters and the way that it is like you complaining, well, why are they shooting mushrooms at me? I'd be happier if maybe they were broccoli or maybe they're cauliflower. It is what it is. I mean, it's important that you open your eyes and you realize what it is, what are the rules, what is the framework. But once you know that and you can plan accordingly, you can break that model very, very easily. I mean, you all know, and I've said it repeatedly, I live by a very simple adage. Neither a borrower nor a lender be. I am ridiculously diversified. I own a little bit of everything in this world. Well, no, that's not true. I will not own Russian rubles. I will not own Chinese yuan. I do not support totalitarian dictatorships, and I won't. I make it a policy on the site I won't buy Chinese stocks. And we've missed a lot of really big winners because people are like, well, Brian doesn't like it, so I won't do it. I tell people this is just my opinion. That's just who I am. I've got these silly little, funny little, rules that I've sort of set for myself. That doesn't mean you can't. The point here is that what you have to understand are the rules. You want help learning the rules? This 30-year market veteran, I think I understand the rules pretty well. And what's kind of cool about me is that I've been through some absolutely horrible hardships in this life, so I have been very humbled. At the same time, too, I seem to have this funny little moral compass. By definition, I'm just not allowed to screw you guys over. And if anything, I get really upset at myself if I ever feel like I'm coming across as a shill or I'm making promises that are just unrealistic. So take advantage of this resource while I'm still here. The stuff that I teach works. I see it all the time. It's just really, you just got to know the rules, right? As soon as you know the rules, what I actually ask, and this is really important, is once you do understand the rules and you know how to play the game, it's actually incumbent on you to go along and actually teach the next guy how to play the game right and make a positive difference in this world. So, okay, I think I'm done for rants today. I have to eat a whole bunch of birthday cake. And, of course, hopefully Liam doesn't throw all the hockey jersey back in my face. Wish me luck. You never know with Liam. So, PMA for the win. We'll hit the rest of the level 1 class questions next week. Hope you enjoyed my little rant there about central bankers. Actually, we never really did talk about the really nasty part of what they do and how they actually control economies. So if anything, maybe we'll leave that for the part 2 of the conversation. Somebody remind me to do part 2 next week. All right. Have a great day. Good luck, everybody. Good luck in following your plans. All the best, and bye for now.